The focus of this video is on Schedule A, which is itemized deductions. And here we'll learn how to use expenses like medical expenses, dental expenses, real estate taxes, mortgage interest, and donations. So we'll learn how to use these expenses to help reduce the tax liability. So for this situation, we have a married couple, Larry Jones and Mary Jones, no children, and there is a married couple filing jointly, and they have medical and dental expenses total of $5,000 for the year 2023, and then they have donations like to charities, church, and everything. All their donations is $2,000, and then the mortgage interest from Form 1098 is $9,500, and their real estate taxes is $8,500. And this is the husband, Larry Jones, his W-2. So his income for the year 2023 is $45,000, and his federal income tax withheld is $4,000. And this is Mary Jones, W-2, the wife, and her salary for 2023 was $50,000, and her federal income tax withheld is $5,000. And so their combined income is 45,000 plus 50,000, which is $95,000. And then the total federal income tax withheld is 4,000 plus 5,000, which is $9,000. And then this is the Form 1098, which is the mortgage interest, and they had a mortgage interest of $9,500. And so now we'll go to Form 1040, and then we'll also go to Schedule A to do the itemized deductions. So first, we have Larry Jones, Social Security number, Mary Jones, Social Security number, home address, and then for this, we'll go ahead and use the city of Houston and the state is Texas, and the zip code is 77001. And filing status, married, filing jointly. No digital currency, so mark no. They're not born before 1959. They're not blind, no children. So for this couple, their combined income from the W-2s is $95,000, and they don't have any other income. And so all of this, combining lines 1A to 1H, is a total of $95,000. No taxable interest, no dividends, and nothing here. And so combine all of these, we have for line 9, we have $95,000. And so for this couple, the total income is $95,000. They don't have Schedule 1, and so it's just 0. So line 11, it just subtract line 10 from line 95, from line 9. So we have 95,000 minus 0, just $95,000. And then now we get to line 12, which is we need to use either standard deduction or we use itemized deductions, Schedule A. And so for 2023, the standard deduction for Mary filing jointly is $27,700. But now let's go do the Schedule A, which is the itemized deductions, and see if we get more than $27,700. or not. And then before we go to Schedule A, notice again line 11, line 11 here. This is called the adjusted gross income. And so for this couple, the adjusted gross income is $95,000. And this is Schedule A, itemized deductions. So line 1, we input medical and dental expenses, and for this couple is $5,000. Line 2, enter the amount from line 1040, line 11, that's the adjusted gross income, and so it's $95,000. Line 3, multiply line 2 by 7.5% or 0.075. So multiply 95,000 by 0.075 and we have 7,125. Line 4 is subtract line 3 from line 1. And so we do subtract line 3 from line 1, we get a negative number. And so we enter 0. And so what it means is that for this couple, the adjusted gross income was $95,000, and then 7.5% of this amount is 7,125. But their medical and dental expenses is only 5,000, which is less than this number, and therefore they cannot use this $5,000. And so that's why it ends up at 0 here. And then line 5A, depending on the state that you're living in, so we know that some state we have to pay state income tax, and then other states we don't. And so for this couple, they are living in Houston, and so they're living in Texas, and so no state tax, no state income tax. And so for line 5A, if you don't have state income tax, then you just use the general sales tax. And so there's a couple of ways to get the to calculate the general sales tax. One way is to keep all of your receipts, and then at the end of the year, just add up and see what your sales taxes are. And the other way is we can also use a website from the iOS to estimate the general sales taxes. And so for this couple, let's go ahead and use the website to just estimate their general sales taxes. And then also, when we're using general sales taxes, then we need to check this box. And so if we choose to use the general sales taxes, then the iOS has a calculator or a website that can actually help us estimate the general sales tax. And so to get to the calculator, then go to Google and then input using the sales tax deduction calculator. And then we'll get this link. And then we click on this link, then this is what we'll come up with. And then click on use the sales tax deduction calculator. And then next, input the tax year, which is 2023. Filing status, married, filing jointly, no children, no boats, no RV or anything. Input income, which is line 11, adjusted gross income, line 11 from Form 1040. Line 11, Form 1040, the adjusted gross income is $95,000. And then nothing here, and then click next. And then input the next part we'll use the city of Houston for the to calculate the sales tax. And so the zip code we use is 77001. We use and then the question here is enter the did this couple live at the same address for the entire year 2023, and then we just mark yes. And then when you enter the zip code 77001 or 77011, then we'll get Houston, and then just click next. And then the website will estimate the general sales tax for us, and so in this case we get 1,589, and then we just go back to Schedule A and input this on line 5A. So we back at Schedule A, and so line 5A, for the general sales tax we have 1,589. And then for this couple, the real estate taxes, that's the tax for the house and the land is $8,500. And then line 5C, this is personal property taxes, things like boats, RVs, things like that. They don't have any. And then 5D, you just combine 5A, B, C, then we get 10,089. And then line 5E is to compare line 5D and then enter the smaller. If 5D is more than 10,000, then just input 10,000. And then line 7 would be just 10,000. Mortgage interest, line 8A is $9,500. And then nothing here, so line 8E, we get $9,500. And then line 10, we also get $9,500. And then the donations, charities, church, $2,000, so we have $2,000. And then nothing here, and then nothing here, and so line 17, it just add everything, 0, 10,000, 9,500, 2,000, add all of that up, and we get 21,500. And so for this couple, the itemized total itemized deductions is 21,500. So total itemized deductions is 21,500, but recall that their standard deduction for married filing jointly is 27,700. So this amount we consider as way less than the 27,700. And so therefore we will use the 27,700 and we will not use Schedule A. And so this 21,500, we cannot use it. And since we're not using the itemized deductions, we will not submit Schedule A. And so Schedule A will not be part of the return of the tax return, since the standard deduction is much higher than the itemized deductions. So now we're back at Form 1040. So line 12 is either standard deduction or itemized deductions. And so we chose to use the standard deduction because it's higher. So for married filing jointly, standard deduction is 27,700. This couple does not have Form 8995, so it's 0. So line 14 is 27,700. And then line 15 is subtract line 14 from line 11, 95,000. minus 27,700 is 67,300, and this is their taxable income. Now we need to figure out the tax liability. So to figure out this couple's the tax liability, we can just go ahead and use the tax table for year 2023. So we can go to Google and then type in 2023 tax table. And then we'll get this link. And so we click on this link. It will take us to the tax table. So here's the tax table. And so here we have a taxable income of 67,300. So scroll down until we see 67,300. So here we have 67,300, and then this column is for single filers, and then this column is for married filing jointly. And so for a taxable income of 67,300, the corresponding tax is 7,639. Once again, taxable income of 67,300, corresponding tax is 7,639. And so line 16, the tax liability is 7,639. Line 17, this couple does not have a Schedule 2, so it's just 0. And line 18 is the 7,639. Line 19, no child tax credit. Line 20, no Schedule 3. So line 21 is 0. Line 22, subtract line 21 from line 18. Subtract line 21 from line 18, and we have 7,639. Line 23, no Schedule 2, and so it'll be 0. And then line 24, add lines 22 and line 23, and we have 7,639. So this is the total tax. And then line 25A, recall that for this couple from the W-2s, their federal income tax withheld is a total of $9,000. And then nothing on 25B, nothing on 25C. So 25D, line 25D will be $9,000. Nothing on line 26, and no credits or anything here. So nothing on line 31. So line 32 is just 0. So the total payments, which is we add line 25D, line 26, line 32, and we have $9,000. And so for this couple, the tax liability is 7,639, but they have $9,000 income tax withheld, so they overpaid. And so if we do 9,000 minus 7,639, then we get 1,361. So this will be the refund. And once again, to get the refund fastest is to file the tax online. And so for this couple, the only forms that they need to file, if they file online, will be Form 1040, and then the information from the W-2s. And so to file online, we can use services from companies like H&R Block or TurboTax, or we can also do it for free from IRS fillable forms. And so this is the IRS website for filing tax online for free. And so click on Start Free File Fillable Forms. And then if you have an account, sign in. If you don't have one, you just create one. And then once inside, you just input the information from Form 1040 and then information from the W-2s. And then you just click submit. If there's an error, and then the iOS will send the return back in a couple of hours. Then you just fix the error and then resubmit it and just keep on doing it until the iOS accepts the tax return. And so once again, the focus of this video was on Schedule A, how to do itemized deductions.